Okay, we can start. So, hello, everybody. I'm Dr. Costantino Grasso, and I serve as an associate professor in business law at Manchester Law School. In my capacity as the co-founder of the Corporate Crime Observatory, I'm delighted to welcome you to the first part of the event, Compliance, Avoidance, and Evasion in Taxation, the Role of Professionals, the Gray Area, which is entitled At the Crossroads of Tax Practices, Ethical Challenges, and Democratic Issues. This event has been co-organized by Professor Diane Ring from Boston College, Dr. Donato Bozza from Roehampton Law School, and myself. It is hosted by Boston College Law School, Manchester Law School, and the Corporate Crime Observatory. The Corporate Crime Observatory is an international platform established by independent academics and experts from different countries and backgrounds, devoted to promoting the analysis and discussion of corporate economic crime issues, as well as other forms of corporate responsible behavior around the world. The most relevant objectives of the observatory include raising awareness about corporate and economic crime through constant publication of news, opinions, bulletins, conducting cutting-edge research through the organization of scientific events with an international dimension, like the one we will enjoy today, and establishing a repository of information and data related to these areas of knowledge. If you have the time to visit our website, you may enter your email address and subscribe for free to the Corporate Crime Observatory and get all the updates delivered to you. I will soon include the hyperlink in the chat. The observatory represents an open research environment, and we are keen to create a wide and diverse community of experts, thinkers, and researchers. So if you have any expertise in an area related to corporate crime, economic crime, corporate responsible behavior, or you have a story to tell, perhaps you're a researcher, journalist, lawyer, accountant, compliance officer, auditor, or even a postgraduate student, and you would like to participate in the activities of the Corporate Crime Observatory, feel free to contact us. We will be glad to explore opportunities for cooperation. Today's International Roundtable represents the continuation of a comprehensive research activity carried out within a 2-year project, Virtue, which was funded by the European Commission. If you're interested in learning more about the project and would like to explore its outcomes and findings, feel free to visit the part of the Corporate Crime Observatory that is dedicated to it. Most recently, this research led to the publication of a special issue, which included 9 different articles entitled Tax Evasion, Corruption, and the Distortion of Justice in the Duke University's Journal of Law and Contemporary Problems, which is freely available online. The special issue explored the intimate interconnections between tax abuses and corrupt practices in the area of taxation. We will be honored to receive comments and feedback related to our articles from you. Again, I will include the relevant hyperlinks in the chat after this brief presentation. This study has led to the organization of a series of 3 international roundtables, of which this one is the second. These roundtables aimed to explore, in an innovative way, the key role played by professionals in the area of taxation. In February 2023, we held the first roundtable, which focused on what we have defined the bright area of tax professionals. It explored the key role played by professionals in the area of tax compliance, with a special emphasis on ethical approaches and adherence to the rule of law. The video recordings of the event are available online on the Corporate Crime Observatory. Today's event will represent the first part of our discussion on the ambiguous domain known as the gray area in taxation, a realm where taxpayers' action oscillate between legality and illegality. The discussion will delve into how tax professionals facilitate various forms of tax abuse while operating in this nebulous zone. The second part of the discussion on the gray area, that is entitled The Conundrums of Tax Professionals, Technology with Avoiding Ethical Decision-Making, will be held online on the 11th of October 2023. Finally, we have planned the final event, which will focus on the dark area, which is characterized by unethical and criminal conduct, for the 10th of November 2023. As usual, we will advertise the events on the Corporate Crime Observatory and social media platforms. I'm now delighted to introduce the co-organizer of this event and moderator of this session, Professor Diane Ring. Diane is Professor of Law and the Dr. Thomas Carney Distinguished Scholar of Boston College Law School. A renowned expert in international and corporate taxation, Diane's scholarly work addresses critical issues like tax leaks, corruption, and international tax relations. She's also been a consultant for the United Nations tax projects and is the author of 3 seminal case books in the field of taxation. Please allow me to thank most sincerely our terrific panelists who will offer their valuable opinions today. It's a great honor and pleasure to have all of you with us. Finally, I would also like to give a big thank you to all the members of the audience who have taken the time to be with us this Friday afternoon. We have almost 40 participants today, right now, and this is not only inspiring for us, but also underscores the social significance of the debate we are about to engage in. It's now time to start our afternoon of discussion analysis, so I'm delighted to give the floor to Professor Diane Ring. Dear Diane, the floor is yours.
Thank you very much, Costa. And I would like to add my welcome both to our panelists who have joined us here today to really share their expertise with us collectively, and also the audience as well. We're very excited. The issues that we'll be talking about today are ones that we found to be incredibly pervasive and important in tax law, tax practice, tax policy. And so we're really, really excited to explore these questions in greater detail. I just want to say a little bit about the structure of our roundtable today. We'll break it into 4 sections. They're not of equal length, but they're divided, I think, to kind of capture some themes and ideas and have a little bit more of a coherent discussion within those sections. So that's the first piece. We'll take 2 short breaks during our sessions today. In terms of the mechanics, given the size of the panel and the sort of the nature of this event, it's sort of a research-oriented event, we're trying to sort of streamline both the focus and the conversation and not have too much in terms of distraction. So as a result of that, we are disabling the chat function for this event, but we're really interested in audience participation and feedback with us. And so we have enabled all audience members to share their opinions, comments, and questions through the Q&A interface. And although you won't be able to see or view the submitted comments or questions, we are receiving them. So be assured we're getting them. And then as we go through our session, I will try to weave those where there are questions or observations into our discussion as they sort of arise. So again, really welcome you being here and encourage you to share your thoughts, questions, and observations in the Q&A interface. All right. So what I'd like to do now is introduce the panel. It's hard because I can only say 1 or 2 sentences about each person so that we can dive right in, but I am excited about the perspectives and the background that they bring. And I encourage you all, if you're interested in learning more, to go to the Corporate Crime Observatory website to sort of explore our panelists in greater detail. But in brief, let me run through who is joining us here today. First, John Christensen. He's a forensic auditor and economist who specializes in fraud investigations and offshore finance. He's co-founder and former chair of the board of the Tax Justice Network, and additionally founder and member of the governance board of Tax Inspectors Without Borders. We also have Fabio de San Silva. He's an associate professor of international studies and the Wick Carey Professor of Brazilian Studies at the University of Oklahoma. He has developed an award-winning series of award-winning studies on anti-corruption crusade, Lava Jato, and the crisis of Brazilian democracy. Also with us, Philip Laromagesi is an associate professor of tax law based in Florence. His research focuses on tax liability of trusts and other non-corporate entities, as well as European and international tax law. He exposed the systematic corruption at the heart of the Italian academic recruiting system. Linda Lee will be joining us shortly. She's a senior solicitor at Waitman, specializing in regulatory law. She is the current chair of the Law Society's Professional Indemnity Committee, and she also serves as commissioner for the Criminal Cases Review Commission and works as a deputy district judge and assistant coroner. Richard Murphy is a professor of accounting practice at Sheffield University Management School and a fellow of the Institute of Chartered Accountants in England and Wales. He's the founder and current director of Tax Research UK, and he developed the concept of country-by-country reporting and authored several books, including The Courageous State and The Joy of Tax. Jason Piper is head of tax and business law in the Professional Insights team at ACCA, a global body for professional accountants. His research encompasses business regulation, taxation, and the impact of technology on entrepreneurship. Sudesh Rao is a PhD researcher at the Institute for Austrian and International Tax Law at Vienna University of Economics and Business. His research focuses on money laundering, illicit financial flows, taxes, and good governance. Samiraz is a management professional with a background in technology, management, and education. He holds a PhD in business and management from Austria and teaches at a business school in Germany. His podcast, Counter Accounts, covers diverse perspectives on contemporary socioeconomic issues. Theodore Sato holds the Frederick J. Lower Jr. Chair and is professor of law at LMU Loyola Law School in Los Angeles. After graduating from Harvard College and law school and clerking on the Second Circuit, he became a partner in a tax department. He currently teaches tax, property law, and public finance. Martiana Sipahutor works for the Indonesian Tax Authority and specializes in tax law enforcement and international cooperation. She's an Indonesian delegate for the Working Group on Exchange of Information in the OECD's Task Force on Tax Crimes and Other Crimes. She is also in charge of other forms of international cooperation, R40, for Indonesia's Mutual Evaluation Review of FATF. Paul Scott is a former trial attorney in the civil fraud section at the U.S. Department of Justice. Since leaving the Department of Justice, he has maintained a nationwide whistleblower practice. He currently serves as a board member for the Anti-Fraud Coalition, the largest whistleblower organization for lawyers in the United States. Robert F. Vander Bretterode is a tax lawyer and scholar with over 35 years of experience in international law, international tax. He's held leadership positions in tax at several Big Four accounting firms and is currently a professor associated with the Global Humanistic University in Curaçao. And Carlos Wefe is a postdoctoral research fellow at the Universitat Oberta de Catalunya. He is a former senior research associate at the International Bureau of Fiscal Documentation and a former chair of public finance at Universidad Central de Venezuela. So as you can see, it's an exciting group. We are thrilled that they have really put aside their day to spend time with us. And so we're really ready to dive into the first session. So the first of our 4 sessions is entitled Into the Gray Area, Exploring the Boundaries of Tax Advisors' Professional Activities. And just to give all the audience a sense of really what we're looking at in this first session, we're focusing on the gray area of tax professionals, where tax abusive practices sort of thrive between what's legal and perhaps illegal activities. It analyzes the characteristics of these actions, highlights the involvement of professionals, including accountants, lawyers, and others. It addresses manipulation of legislation and complexity of the tax system. It also emphasizes the privileged position of tax professionals, ethical distinctions, varying perspectives on complexity, concerns within the tax industry, and collaboration of diverse tax professionals and other professionals in facilitating tax abuse within this gray area. So as you can see, a lot to cover in that this first session. I thought I would get us started with a kind of a bit of a broader question. I'll just sort of lay out, and anyone who would like to get us started, just raise your hand. So my first question is, the gray area of tax advisors' professional activities is characterized by, I think, what we call unethical behavior that exists in that space between legality and illegality. And its complexity is reflected in the conceptual difficulties that we can have in defining it. And so my question is, what, from your perspective, are some of the main features of tax advisors' professional activities in this space, right? What do you see that sort of is defining work in this space? And I'll just sort of start with that. Anybody like to launch us?
May I start, or Robert?
Why don't you start?
Okay, perfect. Yeah, thanks, Diane. Maybe one of the gray areas, I think it's much more crucial and which is generally not discussed, is which I think is the use of privilege for the purposes of tax avoidance. Tax avoidance as such is a gray area. What does fall under the area of legal planning? What is illegal tax planning? And where is the boundaries of legal professional privilege? So this is something, an area which I think needs a particular attention when we are discussing about the focusing on aspects of tax. And this is an issue. Why this is a particular issue is because this is not being discussed in the public, because anything, as you know, the legal professional privilege or client attorney privilege is anything which is a client communicates with a lawyer is being considered, if it's during the course of normal litigation, it's a privileged information. And what we have been seeing in the through various evidence which has been given by different tax authority. One we see in Australia, and this is also in South Africa, that this privilege has been misused in many of the cases. And I think this is one of the areas which generally falls into the gray area. What is the boundary line of use of privilege? So this is something I feel needs a particular attention. Yeah.
Thank you. Robert, turn to you next.
Yeah, thank you, Diane. My starting point is actually a step back, I think, even from what Raoul just said, is the gray area is simple to define in the sense that we can do what our clients are allowed to do. So if the client is still within the boundaries of the law, then our advice is, of course, also within the boundaries of the law. The problem is defining what the boundaries of the law are. And you have people that are big fans of supporters of corporate social responsibility, which is, well, the last 10 years, there was a lot of studies in that area. And they basically claim that tax planning is perhaps not illegal, but it is immoral. So they come with a moral standard that seems to be located outside of tax law. And because everybody has to pay its fair share. Fair share is a difficult thing to use as a standard because we cannot define it. So it has not much practical use. But I think that the standard, the ethical or moral standard of the obligation to pay cannot be found outside tax law because it is not an obligation per se. It is an obligation in lesion. If there is no tax law that obliges you to pay a tax, then there is also no moral obligation to pay tax. That's if you live in Florida, the state of Florida has no personal income tax, then nobody can say you're immoral or unethical for not paying it. There is no legal obligation. So you have to look, what are the boundaries within the law? And they are there. Of course, it has been a long discussion in the past. We had, in the UK, they had the Duke of Westminster doctrine that basically said, everything is, you are totally allowed to try to reduce your taxes. That was clearly form over substance, but it has changed. It is also in civil law countries, substance over form. Basically says we look at the purpose, of course, we look at the text of the law, but that's not the only thing. We look at the purpose of the law. And I understand that it's not a nice, clear cutoff that we say, oh yeah, this is allowed and that's not allowed. No, it's case by case. And people who don't like that and accuse people of being immoral by using loopholes forget that the loopholes are in the law and made by legislators. So if they don't like them, they have to change the law. I'm not saying that all tax paying is moral, but it may still be legal. And since the law defines what is allowed, that are also our boundaries. So basically, you look at what is if you say there is a bandwidth, there is a maximum you have to pay. The maximum is clear from the law most of the time. There is a minimum, and that is defined by the spirit of the law. If you violate the spirit of the law, you go below that. Now, sometimes that is difficult to find, but that are also our ethical boundaries. That's what I wanted to say.
Okay. Carlos and then Ted.
Everyone, thank you, Diane. Building on what Robert has just said, I would like to point out the philosophical perspectives of it. Building on, let's say, some Dworkinian concept of law. If you build the legal system on the bricks of rules and principles, you will find that the gray area is defined by the violation of principles by not violating the law. And there's the main issue when we discuss the gray area. We're not discussing here illegal activity. We're discussing here unethical, immoral activity that might allow the interpreter of the law to expand the scope of the law. That would be the recharacterization that characterizes most GARs and SARs, most general anti-avoidance rules and so forth. And here lies the particular difficulty of it. We're discussing particular issues to which the law is not by nature applicable, but that claim for their unfairness. It's, as Robert pointed out a few moments ago, an abuse of law. And what is an abuse of law? Is by definition you're doing what's legal, what's quote unquote allowed, and that brings, and that in a context in which legal professionals are bound to a duty of loyalty to their clients and trying to maximize their profit in the context of business through legal means, as Robert just said, then the issue lies in, okay, but this is this, and definitely the title for this roundtable is quite descriptive. This is not black and white. This is just gray, and this unveils many important issues. And I would like to be provocative, particularly to Sid, is curtailing taxpayer rights. It's curtailing the ability that the taxpayer has, in the line of Gregory versus Helbring, to arrange their business so they can pay the least tax possible within the boundaries of the law. The way to address the gray area, shouldn't we try to get the gray area more clearer so it's wider than the lacquer, so to speak? And that would be it. I'm just being provocative.
Carlos,
so
I hear a call for many tax rules, right? So that's where you're pushing us to really expand the law. I'm just pushing. Ted, I want to turn to you next.
Sure, thanks. I want to start by perhaps disagreeing with Robert's initial statement, which was that we're allowed to do whatever our clients allowed to do. That's certainly not the way I conducted my practice when I was in practice. I view tax lawyers, I can't speak for other tax professionals, but tax lawyers as, in a sense, gatekeepers. That is to say...
Yes, I'm in the seminar.
Oh, John?
Hold on a second. I've been unmuted.
I'm sorry. In the event, I view tax lawyers as somewhat functioning as gatekeepers. There's a bunch of, in the United States at least, guidance about the kinds of positions that tax lawyers can take. And they point to a 33% chance of success in litigation. At least that's one way of interpreting them. That's certainly not the standard that's imposed on clients. So I actually view the roles of tax professionals not simply as being the minions of the clients, doing whatever the clients can do and want to do. I think we have other responsibilities. With respect to Carlos's claim that what we're really talking about here in the gray area is behavior that is legal, but somehow that violates the spirits of the law. And I again want to express some skepticism about that. The problem is that the legislature or the regulatory authorities have written poorly drafted legislation or regulations. And the question is it the responsibility of the private tax bar to fix that in the way that they advise their clients? And I would suggest that that's not the responsibility of private tax counsel. The private tax counsel may very well try to get those holes filled through back channels. I actually did that when I was in private practice. But in the meantime, I think it is the responsibility of private tax counsel to advise their clients of the law and the regulations, however inadequate and full of holes they might be.
Thank you. Next, I have Fabio and Linda. I'm going to ask if you can just be kind of brief, because I think we're going to have space for some of these issues. I want to hear what you want to get us thinking about right this minute, but then move pretty quickly on to the next question. So Fabio first.
Thank you. And I think, first of all, just a caveat that I'm not an expert in tax law and I'm not an expert in tax lawyering, but I do study legal professionals and how they relate to a number of societal issues, including democratic backsliding, which is one of our topics later down the road of this webinar. But I want to, I guess, take a more critical step here and claim two things just for the purpose of complicating the discussion here. The first one is that I think that the gray area is actually the norm in, at least in the practice of law, right? I don't know about the other professions that we are considering here, but in terms of legal practice, what lawyers do is precisely to explore and exploit sometimes the loopholes that exist in legal systems to try to advance the interests of their clients. And that is true for, avoiding taxes, but it's also true for to defend the public interest. If you think about Roe v. Wade, for example, the decision says that the right to privacy that grounded at the time the right to abortion was found by the court in the penumbra, right, of the Constitution. So that really tells us that law is not a self-defining set of rules, and that there is room there for contestation. And obviously, this is the broader context in which law practice takes place. And the other point that I wanted to make is that even though I agree with Theodore and others who claimed that you can always try to shrink this indeterminacy of norms, that's virtually impossible, right? You can't have a system in which every single detail of human conduct is regulated. So I think, just to throw that there, and I have a couple of other points here that I want to make, but I'll save them for later. And then the question becomes, how do we, on one hand, normalize the idea that the gray area is actually, where this all happens, but at the same time, think about ways in which the conduct of these professionals can be somehow regulated or steered towards something that amounts to the public good.
Thank you. All right, Linda and Philip, if we could just do quick ones now, and we'll keep coming around to some of these issues a lot. So Linda.
Thank you. Apologies for being late, and apologies if what I'm going to say has already been said. But I'm a lawyer, and my only contact with taxation was that I was a member of the Taxation Disciplinary Board some years ago, and disciplined tax accountants. And my first observation is that in this space, there is a wide range of people advising clients, from totally unregulated to those who are very closely regulated. So in England, it's solicitors probably at the top end. Bottom end, it is people who have no qualification, no regulation whatsoever. And the difference that has always struck me is that solicitors and others who are highly regulated have to have a higher concept that they have to examine every action through. So the solicitor's highest duty is to the court, not to their client. For example, medical professionals, they have to abide by the overarching objective. And then there are people the client's interest is paramount. So I think you have to have an ethical standard that goes above the regulation, because you can't regulate for every possibility, every circumstance, particularly not something so fast changing as taxation. So you've got to find a way of imposing that higher duty on everyone involved in that, so they interpret their actions through that prism.
Thank you. Philip.
Yes, hello, thank you. I just wanted to add, if I may, a further angle to the analysis of the gray area, referring to the fact that very often it's the law that points to tax avoidance, meaning that it is an incentive to tax avoidance. take the example of the check the box regulation in the United States that started in 1997. It's a regulation. It wasn't passed by Congress, and is just a, I mean, it's a regulation, and it's at the all the BEPS problem probably originates from this regulation, and the whole global reform with the pillars, the actions, could have been avoided probably in great part by taking away the check the box. And the check the box is an incentive to dodge the principle of international taxation.
Thank you. I just want to sort of highlight a few things that have come out that are going to be, I think, further connecting to the questions we'll be talking about shortly. In, you know, some of what we've heard is really talking about systemic issues in the design of the system, design of law, role of certain players, you might call them masterminds, and also thinking about how multiple players are coming together, at least in certain contexts, to make the conduct happen and to make it possible. And so I just want to sort of plant the seeds of paying attention to those themes that arose, because they'll be coming out shortly in some of the questions. But before we get to those, I just want to do almost a lightning round, sort of 30 seconds, of asking if there are any examples of conduct in this gray area. So we're sort of calling it unethical. It's not illegal, but we're not comfortable saying it's absolutely legal. It's in this gray area. Just quickly, examples so that we can have sort of a variety of ideas about things that people are imagining. So Martiana, I'll start with you. Unmute.
Thank you, Diane. So based on my experience, an example of unethical professional activity that falls within the gray area is the advertising of law firms to use foreign entities domiciled in low tax jurisdictions, especially which adopts territorial base of taxation to have financial assets in the third jurisdictions, so that even though those third jurisdictions share information under the automatic exchange of information mechanism, namely common reporting standard, the information will be exchanged with those low tax jurisdictions, not with the residence jurisdiction of the beneficial owner. The CRS will result in insignificant or no tax consequences for the beneficial owner. Thank you.
Thanks. John.
Yep, thank you. I'd like to just raise the issue of the provision of opinions, legal opinions from lawyers. I'm not a lawyer, I'm an economist, but over the course of quite a long lifetime working within this area, I've come across many legal opinions coming from very high-ranking tax lawyers, very often King's Counsels here in the UK, which frankly strike, and these legal opinions underpin tax avoidance schemes that have been put together by either other lawyers or by accounting firms. The legal opinions are notionally independent, but in many cases, the legal opinions that I've seen are frankly shockingly fraudulent, to the point where, you know, one begins to wonder whether the cases actually understand the law, or if they're recognizing that in most cases, these legal opinions will not ever see the light of day in a court, but will underpin the marketing of extremely doubtful tax avoidance schemes. So that's an area where I think perhaps a bit more attention needs to be paid to the ways in which senior legal professionals underpin what is very often extremely dubious, and sometimes beyond the grey area of tax avoidance schemes.
Thank you. Sid.
Yeah, I think one of the areas which I see is particularly done in the big fours, but when I'm saying it, I'm not accusing any of the big fours of doing this practice, is tax as a field. It could be done by lawyers, it could be done by tax advisors, accountants, or any other professional. But as I was mentioning, the legal privilege, it's specific to lawyer as a professional. So it is particular to a lawyer. So what we have been seeing is accountant or a tax advisor is actually doing the groundwork of an advice and that advice is being run through the lawyer so that eventually a legal professional privilege could be claimed, but the lawyer actually is not doing the work. The work is actually being done by the accountant. So there's a difference, like accountant and lawyer, but just for the purpose of claiming this, you run it through lawyers. So this is something I have been seeing it in some of the cases which have come out in the scandals. So this is, I think, particularly relevant for the practice.
Thank you. Paul.
Thanks. One scheme that we're seeing a lot of in the US right now are conservation easement schemes, which basically involve folks taking a piece of land and then donating the development rights to the land to a land trust in return for a deduction from the government. The idea is to help folks to preserve land, to reduce development, and it has an environmental purpose to it. But the problem is that the valuation that's given to the development rights is many times completely out of whack with what those rights are worth. And so you land up having folks buy a piece of land for $1 million and then ultimately give away deductions for tens of millions of dollars. And in that process, you have lawyers that are writing up the private placement memoranda or helping with the distribution of K1s, the securitization of the deals. Appraisers are accepting assumptions about the potential value of the development rights to the land. Accounting firms are basically promoting those packages, those deals to clients. And it's all sort of gets into this gray area of, well, what's reasonable? How much is too much in terms of this increased valuation that comes from these development rights that are theoretically there and that are not ultimately used? And sort of touching back to your prior question, ultimately the way it gets sorted out is litigation. So for folks who are looking for it to be more black and white, that is ultimately how it gets solved.
Thank you. Linda.
It was really just in reply to John's point, in that I have come across that type of use of counsel's advice, but what has often been the case is that the advice has been obtained on a particular case or a different case, and then that advice, once given to the client, has been circulated around a whole group of other people, and it's said that it relates to a different set of facts or a different case. And so that's quite a common fraud, and that doesn't just relate to taxation. There have been other areas in England where that's happened. And so solicitors have had a specific warning about this in relation to a different issue, to always just not assume that because counsel's advice is attached that it is in any way connected to that case, and to perhaps look even more closely, because it's not in the nature of the way in which we do business that you have counsel's advice to circulate to people.
Thank you. All right, I'll take examples from Fabio and Jason, and then we're going to move on to our next questions. Fabio.
Yeah, no, first of all, I apologize because I'm not going to give you an example here. This is less of a response to that question, but more of a return to the question that we had before, which is how do you constrain, right, that gray area? And this is really on top of what Paul just said. Because I think, one of the ways, I mean, we talked about more legislation, right, for laws that, narrow down the terms of taxation further. But one of the factors that can be important, and this is something, for example, that Americans don't like, or certainly the clients of these lawyers don't like, which is a stronger administrative state. Right, because if you think about these processes as somewhat adversarial, if you have a strong agency that can stand up, right, to these processes and say, listen, we have here a group of technicians, we have here a group of good bureaucrats who've done these studies and who can demonstrate that this is not the actual value of this property in terms of the development rights. Right, at least you have that response, that confrontation, right, of that aspiration that the client has and that the lawyer helps to instrumentalize. So, you know, thinking about this in terms of balancing the forces, I think could be helpful.
And certainly you're right, a struggle in the US. I mean, this week, ongoing issues with IRS funding. Jason.
Thank you. And I think I will just actually take advantage of Fabio's comment to highlight something else around where the grey area comes from, which is that as often as not, it's not simply the words of the taxing statute that might be unclear or provide for ambiguity. It's the interaction with accounting standards, corporate forms, different financing structures that have been developed for certain circumstances. And it's the extent to which advisors generally exploit those. I mean, the specific unethical conduct, which I was actually going to offer, is an example probably almost at the opposite end of the scale, which is very often we'll find in the UK. Individual taxpayers might be entitled to certain deductions or allowances, and there are businesses out there who will offer to submit those and may take a smaller or a larger cut from them. And quite often that then ages over into complete illegality if they are putting in for deductions which don't exist and then charging commission on things which don't exist. The only slight reservation I have about that is that, I mean, as Linda mentioned earlier, an awful lot of you can offer tax advice in the UK totally unregulated, and very often we see it's unregulated individuals who are doing that. So whether it's technically professional conduct, it's certainly tax conduct.
Thank you. All right, I'm going to bring us, because there's so much to talk about, and I have a feeling we'll be able to get our ideas into these other questions. I wanted to kind of turn now to questions I'm going to sort of combine. And it's already something some of you touched upon in your examples about how different kinds of professionals may be critical in achieving certain outcomes. So the question I really want to raise and frame this way is, what are the different roles and functions of professionals, in particular, say, lawyers, accountants, auditors, in this gray area? So what do you see them doing? Say, how do they each contribute? What kinds of, say, different rules or functions? And then I'd add into that, who are the other players, right? Who's external to this sort of more limited world of tax professionals that may be critical to achieving these outcomes that the tax advisors are hoping to achieve and the taxpayers are seeking in the gray area? Philip.
Can I answer to the others, not the lawyers, not the accountants? Do not forget that many of the most famous or infamous cases of tax avoidance in the last 20 years, Apple, Amazon, Google, and so on, they were always rulings behind those behaviors. They were all approved by the tax authorities. So, sorry if I go back to that, but there is a complicity very often of the authority on the one hand, if not of the legislator. Italy, for all its faults, and there are a lot, okay, has a general anti-avoidance rules, and nothing of that could have ever happened, ever.
Thank you. Robert.
Yes, well, you probably don't know that, but I started my career at the Netherlands Inland Revenue Service. I also worked for the Big Four as a partner at Pricewaterhouse, and I worked in-house for a Fortune 50 company. So I have done all those roles, and in all those roles, you have a certain responsibility. As a tax advisor, you're not an agent for the government. You may have a gatekeeper's role, as Professor De Seto said. I'm not denying that. What I said is there's a max you can do. It doesn't mean you cannot do less. But as an advisor, yes, you advise your client what is possible, yes, but you can also say that there are ethical and moral limitations, but in the end, the client makes that decision. I don't. I can, of course, refuse to participate in this. But in-house, I have an example. We had an issue in Ireland, which was value-added tax related. So it was Irish law and European law. We got a Big Four advice, and there was an audit going on, and the Big Four advice was 100% wrong. And I knew that because VAT is one of my expertise. And I basically stopped litigation, and I talked to and made a deal with the revenue service there. So in-house, you have a responsibility to evaluate what your advisors are saying. So you want a strong in-house tax function too. But of course, you can only do that if you're a big firm. As an advisor, the problem is I may be a junior person or non-partner in a firm and think that something goes too far, and the partner says you have to do it anyway. What do you do? And if the big firms have no internal ethical rules and you're an employee, then you're stuck, you lose your job if you don't follow suit. So that is a problem too. And then I think Philip was very right with those cases in the UK. We had that parliament investigating and accusing them of being unethical, etc. Although the lady herself inherited millions from her father that are in trust funds, but that's a different matter. She was right to some extent, but Apple did follow the rule, and HMRC did sign off, and they did that because the law allowed it, and this parliament that made those laws. So sometimes there is some hypocrisy going on, that legislator under the television camera is calling you unethical, but you're unethical by following the rules that they made themselves. Thank you.
Thanks. So I have Ted, Martiana, and Samar.
So I'm going to put myself, I think, on the hot seat a bit. Some years ago, I was asked to consider a device, for want of a better term, that investment bankers had developed for potentially converting expiring net operating loss carryovers that corporations held into cash. And the technique involved the issuance of preferred stock, which was designed to have the characteristics of various forms of debt, so adjustable rate debt or short-term, basically reserve debt, that sort of thing. But it was essential for purposes of the tax technique that the instruments be treated as stock. So I was called upon to give an opinion, and I did. I gave a clean opinion that this would be treated as stock. And in terms of John's comment earlier about opinions, so the problem with giving that opinion is that if you're wrong, and if the class of investors suffers as a result, you, the lawyer, are then liable for their damages. So it's not a trivial thing to give an opinion like that. At the time, our firm's malpractice cap was $45 million. And the tax swing on each of these deals was in the neighborhood of $250 million. So I was giving the opinion naked, basically. Now, happily, I was right. And happily, the IRS subsequently issued a ruling that said I was right. But here we've got the investment bankers actually thinking up the gizmo. We've got the lawyers acting as gatekeepers here. So I was saying, yes, you can do this. And I was doing that by being willing to issue the clean opinion. But it was a non-trivial clean opinion. It was not something that you issue lightly because the consequences for all of my partners would have been catastrophic if I'd been wrong.
Thank you. Martiana.
Thank you, Diane. If I may address your second question about other figures external. So I will give you an example about engagement of notaries and law or accounting firms in Indonesia. Because prior to 2020, foreigners were not allowed to have freehold ownership, only the right to use or lease properties. So how could many foreigners own commercial villas in Bali and other islands in Indonesia? This is what they do. A foreigner will find local people who are willing to sell their land to the foreigner under nominee arrangement. Then they enter into two agreements in front of a notary. First one is loan agreement, which is back-to-back with the second one, that is renewable lease agreement. The loan agreement states that the foreigner lends a certain amounts of money, which will cover both the selling price of the land and the fund to build property on it. At the same date, a renewable lease agreement will also be signed by both persons which states that the foreigner rents the land of the local person for a tenure of 20 years or so, with a total of lease payment of like 5% of the loan amount, which is basically fee for being nominee. So formally, the title of the land is never transferred to the foreigner. But when the property is rented commercially, the rental income is received by the real owner without paying income tax in Indonesia. Sorry. When the villa is then sold by the foreigner to another foreigner, it will be done without paying income tax on the capital gain in Indonesia. Does the notary know this? His or her doing in facilitating this nominee scheme is abusive, not only to agrarian law, but also to tax law? I think so. But if you Google how to own properties in Bali as foreigner, you will find numerous services offered by, of course, local and international law or accounting firms, which will find you the right notary to make those agreements without the need to be present. Thank you, Diane.
Thank you. All right, so we're going to do our next four and then move on to a new question. So I have Samar, Sid, Carlos, and Paul. So Samar.
Yeah. So, I mean, my response might intersect with the discussion we've already had, but, you know, I see it from, I'm going to bring in a couple of theories here. So from political theory point of view, you know, a state governance apparatus has three pillars, right? You have the legislature, you have the executive bureaucracy, and you have the judiciary. So whatever the gray area, wherever the gray area, it shouldn't, or I would probably say cannot exist without the interaction of those three pillars. Plus, nowadays we also add, at least in parliamentary democracy, media. So media has a huge responsibility to hold these individuals and institutions to account, whatever the gray area or whatever the limits of the gray area. Now, that's one point I wanted to make. The other point, you know, I think probably intersect more with Robert's points previously, that when you are a professional, you have two responsibilities, two major responsibilities, in my view. You know, if you're working for a company, or if you're an executive or a lawyer or tax professional, is your, I would say, probably ethical responsibility to give the best, right? Or you can call it shareholder value. You can apply whatever you want. But at the same time, you're also a citizen of a state. So you have a broader responsibility. You know, your children go to school, you know, the government builds bridges, provides you institutions that protect you. So the whole social contract idea. So there's always, you know, the gray area I see is, for professionals, it's like, on the one hand, you have a professional responsibility to make sure your clients are well looked after, they're defended well, they're, you know, being given good advice. But on the other hand, you have a broader responsibility as a citizen of the state. Now, ethics, you know, unfortunately, there is no, you know, a course that, you know, it's not applied. You don't learn that in an institution. You learn to be a tax professional. You go to a tax institution. You become a good lawyer because you've been to a brilliant law school, professor, whatever. Ethics, you know, we learn in society, so through social consensus. So, you know, the type of society we build. I'm sorry, I'm being a bit too broad here, but I think this is important that we consider that. So there are a couple of points I just wanted to raise here.
Great, thank you. Sid, Carlos, and Paul.
Yeah, just to add to what Martiana said, and to also emphasize what Samar said, is I think one of the key professional which we are missing is, if we have to, when we are focusing on tax, we also need to focus on the beneficial ownership as a topic to find who actually is the ultimate owner of the assets or property or companies or trusts. So one of the key players which is a part of this is some law firms or some individuals who could be appointed as a directors, dummy directors, or dummy trustees. And this is particularly in some of the tax havens, this is happening. You can just appoint a person to act as a trustee, to act as a representative director for the requirement of the law. So I think these are the key professional, key people which we need to also focus on, other than the lawyers and accountants or tax advisor, which are generally in the focus. Yeah.
Great, thank you. Carlos?
My take on Diane's question is that regardless of you taking the position of an internal perspective on the tax relationship or an external perspective, the thing lies, or the role each and every person involved in the tax phenomenon lies in the balance between what Max Weber called the instrumental rationality and the value rationality. The problem is that most people acting from an internal perspective, and that includes, as Philip rightfully pointed out, even the tax administration. In just a couple of words, money talks. And with tax, when we're discussing tax, we're discussing money changing hands by operation of law. And that drives people to exacerbate, so to speak, their need for an instrumental rationality to save the most or to gain the most, depending on the situation. And that's where the value, what Weber called the value rationality, takes a paramount role. And all parties involved, and I summon to Robert's experience in many perspectives, I can particularly relate to that, is that regardless of the instrumental rationality, regardless of you playing a role in this, in keeping the balance of this economical relationship, you need to keep the focus on the major ends, and that would be those of public policy and the greater goals of taxation as understood under the rule of law. And in that particular scenario, the public opinion from an external opinion plays a very, very important role in addressing and pointing out at least those most adamant distortions or deviations, not only of the letter, but to the spirit of the law, which the gray area entails.
Yeah. Paul. Oh, you're muted.
Thank you. Sorry. Yeah, I was I just struck in listening to this that really it's driven in large measure by the nature of the scheme. Yeah, like when you're talking about, the other characters that are involved in this. I mean, if it's a large corporate scheme, big four accounting firms can play a role. If it's offshore bank accounts that are, where people are hiding money, then you've got private wealth advisors and the like. In the case of conservation easements, you've got appraisers who are central. And actually, if I was to give a pitch, just generally, appraisers are never, I think, prosecuted severely enough when you look at how central they were to the savings and loan crisis back in the day, the 2008 financial crisis, and now, presently with this latest set of schemes. But sort of, I thought, Samar, actually, your point was really well taken, that it really is societally driven at the end of the day, in different, countries, regions, jurisdictions. The emphasis just generally on what is ethical, appropriate behavior is going to drive all of the folks in these different sectors and these different professions to, be more or less responsible in their behavior.
Great, thank you. I want to focus now specifically on legislation. It's come up a number of times, and ask from your experience perspective, how do tax professionals and their firms engage in what we might call abusive practices by, shall we call it, manipulating legislation, to favor influential or powerful clients. So how would we see that intersection with the legislation, and where does complexity fit in, right? Is that just sort of a byproduct? Is that actually part of the toolbox, the complexity itself? Sort of what are you seeing with that?
Was that a question for me? Sorry.
Oh, that was for everybody.
Oh, no, sorry. I heard Philip.
Oh, sorry.
Okay,
No,
sorry,
I would
sorry.
never have put you on the spot like that.
Oh, okay. But I have something to say.
Well, then go for it.
I was just thinking about how the inclusive framework progression and how from some particular problems in international tax avoidance has led to a system which is totally unmanageable by the tax authorities. I mean, what is coming out of this project under Action 1 is something so complex with so much data, with so complex. The commentaries are thousands of pages. I don't know if anybody has had an opportunity to read them, and this is a job that only the Big Four can do. And so I expect that at the end they will take care of the taxes themselves. I mean, the tax authorities will go, okay, you take care of it. We cannot handle this. This is impossible. So it started from a problem that originates from tax avoidance, and the solution goes back in the hands of those who prospered on tax avoidance.
Thank you. Jason, then Richard.
Thank you. I think on the complexity point, there are two elements. There's the anti-avoidance rules, which almost inevitably end up complex because they are trying to address very often the spirit of something that wasn't captured first time around in the strict words. One of the other big problems with tax law is it tends to be very sticky, and tax laws get passed, but they're very rarely removed. And tax provisions are built to deal with, for example, corporate forms, which were maybe popular 100 years ago, but hardly get used now. But unless the corporate form is removed, the relevant tax law can't go. At one point, I think I saw a table of sort of 39 different types of taxable corporate body in the UK. A lot of those get put into buckets, but we've seen plenty of examples where people will pick up on something that hasn't been used for a while, and as new taxes have come in, which perhaps didn't have that in their perception, it's not intentional complexity, but it's there, and it can be exploited and abused.
Thank you. Richard, and then Samar.
Sorry, I had to remember to unmute myself. I apologize for being late. I thought it started at 3:30 GMT, not 3:30 BST, so I arrived for GMT. Anyway, look, this area is a nightmare in very many ways. All legislation is limited by the words that are used and the understanding that people have of words, and we all have different understandings of what any word might mean. So there is always inherent uncertainty in the interpretation of legislation. And every practitioner who's ever had to read legislation and try to apply it to a client situation will know that, even when they have the best possible intentions. And I think that throughout my career, that was the case. I had to deal with the fact that sometimes I did not know what the legislation meant. And I think that is an incredibly important point to note, that there may be uncertainty which is entirely unfortunate, but not deliberate on anyone's part. That does need to be overcome. It can in part be overcome by purposive legislation. The absence of purposive legislation, a statement that is actually included in the legislation itself, saying what this piece of legislation is meant to achieve, therefore giving a basis for interpretation from the outset, would appear to me to be absolutely fundamentally important as we go forward, so that we don't also see tax authorities sometimes reviving pieces of legislation in ways that were not intended. And that has most certainly happened in the UK with regard to the taxation of companies and settlements and so on. There was a very unfortunate use of settlement legislation, which gave rise to massive uncertainty for hundreds of thousands of people in the UK for a period of time, simply because it was never intended to be put together in the way it is. That also gives rise to something which I think is very important, which I've helped try to look at and written about academically. So I'm going to drop my practitioner hat for a moment and put on my academic hat for a moment. And I wear both simultaneously. As far as I know, I'm the only professor of accounting in the UK who actually is still a practicing chartered accountant. I've created a concept called tax spillover effects. Tax spillovers are inherent within tax systems. They are simply the point where one part of the tax system undermines the credibility of another part of the tax system. Now, that might be because the tax rates are in conflict. Capital gains tax rates are lower than income tax rates in the UK, for example. Corporate tax rates are frequently lower than income tax rates. There are therefore very strong inherent incentives to abuse inside the legislation. Is that abuse? Is it not abuse? Is it perfectly legitimate? Is it not? When does it move from one to the other category? When does a general anti-avoidance provisioning cover that or not? For example, when the UK was introducing its general anti-abuse rule in 2013, and I was involved in writing the rules for that legislation, I had to specifically say to HM Treasury, look, there are about 1 million companies in the UK, I estimated, which were being used by contractors to quite deliberately get around paying national insurance by the payment to themselves of dividends. And I said, look, you're going to have to say up front, is this actually within the scope of this general anti-abuse rule or not? Because if you don't, you've just created fundamental uncertainty for 1 million taxpayers. And you have to eliminate that. Now, that comes back in part to purpose of legislation, but it also comes back to the fact that we are talking about the interactions, not just between taxes here, but as Jason said, between corporate forms as well. And I would add even accountancy, because accountancy creates more uncertainties in tax than just about anything else. Because every corporate tax return starts with profit before tax. And let me assure you, that is the biggest uncertain and grey area, probably in every single corporate tax return that has ever existed. Because as a chartered accountant, I know that I can make that number pretty much whatever I like within reason. Therefore, we have to actually accept that there are limitations in understanding. Our goal is to be, how do we eliminate the spillover effects? How do we mitigate this chance that one part of the tax system, one part of the corporate system, one part of the accounting system will undermine the effectiveness of another? And yet there is no tax authority in the world that is systemically reviewing spillover risk. And that to me is quite extraordinary, because there is where most of this arises. And in the spillover risk is where most of the tax gap is to be found. If you can explain the spillover, you'll probably explain the tax gap. If you explain the tax gap, you'll know what you're trying to take on. And if you know what you're trying to take on, you'll know how to target your anti-abuse rules, whether they are targeted or general. But in that way, you can actually begin to remove these grey areas. But unless you actually start with a methodology which recognizes that risk is inherent and uncertainty needs to be reduced for all players within the system, many of whom might be off.
Oh, Richard, can you hear us? You froze. All right, Samir, I'm just going to jump to you. Oh, Richard, you're back. We lost you.
Sorry, did I mute? I was literally winding up. And I was just saying, if we just go from the big end, the systemic risk end, we can then manage that risk. And then we'll be left with a relatively small number of cases where there's obvious intentional abuse. At that point, general anti-abuse rules have to come into play to actually eliminate that, I think. But general anti-abuse rules cannot deal with the massive systemic uncertainties that will exist within the system unless we identify and eliminate tax spillovers.
Thank you. So Samar and Fabio, and then after that, I want to go to 3 questions focusing a little more on tax professionals themselves. So Fabio, Samar, sorry.
Yeah, but just 2 points very quickly. Complexity. I mean, we talked about legislations, we talked about frame. I mean, where do we get this legislation? They come from the parliament to our politicians. Right? If you look at the Pandora Papers, the Swiss Leaks, the Panama Leaks, they weren't just the CEOs and wealthy individuals of companies, they were politicians and their family members involved, right? Now, for me, if you want to talk about dealing with any sort of those issues, you need to start with the top to the parliament. I mean, look in the UK. I mean, I'm British. I know what happens. I mean, I live in Germany now, but I've lived in the UK for many years. But you know, your politicians, members of the parliament, right? During the day, they will go and vote for legislation. In the evenings, they have a second job. They go and sit on the, you know, some corporate board or provide consultancy services, right? Look at in the US, okay, your parliament, your congressmen, women, right? Stock trading. Look at their stock portfolios, right? So unless you remove that conflict of interest, and secondly, also, you know, we live in such a globalized world. You can tighten your legislation in G7 or G10, right? But do you know that the 30% of Africa's wealth is hidden in what Gabriel Zucman calls in his book, The Hidden Wealth of Nation, right? In offshore tax havens, 30% of African wealth. So you can tighten your legislation, the G7, the wealthy, you know, the global north, as we call it, the development science, but then there will be race to the bottom. So unless there is a global treaty, and I know there are, you know, few frameworks that have been, at least people are taking them seriously. I don't see any hope to deal with this issue.
Fabio.
Yeah, just a few words also on complexity, and this is one of the points that I wanted to make in response to your first question: what makes the gray area? And I think, you know, in addition to all that we discussed, is also the fact that we live in a more integrated or globalized world in which there's a lot of room there for multi-jurisdictional work, right? Which again adds all these elements that we see at the domestic level. You know, they come into to be small pieces of a big picture or bigger picture. And I think and this is probably more in conversation with Philip, who raises this issue about international tax avoidance schemes. I think there are two points here to consider. One is the one that he made about the asymmetry of information between, you know, companies and governments, right? Domestic entities trying to figure out this, you know, big web of norms that companies navigate, and that perhaps only the big four can effectively navigate. But there's also an asymmetry between these companies and the citizens, because and this is to highlight the importance of public opinion or civil society, as some of my colleagues here have done, because we don't have nowadays a global social movement that's you know, that's built around issues of taxation. When I grew up, there was a time when you know, people were discussing the Tobin tax, right? In 2002, I went to the World Social Forum, and there was, you know, a big discussion there about adopting these transnational regulations of financial flows. But I think that lost traction, and I don't see room for a global civil society engaged in holding, right, corporations to account with respect to their tax maneuvers.
Thank you. All right. So as I said, I have 3 questions, a little more focused on tax professionals, to kind of close out this first topic subpart. And the first one really is asking about the unique expertise and socially privileged position of tax advisors, tax professionals. How does that put them in a situation, or do you see it putting them in a situation to abuse the tax system? Linda?
This point is really half in the last session and half in this session. And my point is, what struck me listening to the debate is the difficulty is it's an impossible complexity to draft tax rules and regulations that will work completely. because you have a huge number of people who have a vested interest, who are talented, intelligent people, and their sole focus is to find a hole or a loophole in all of this. And so you can't, it can never work. It is doomed to failure, and there's always going to be disappointment that the outcome that the government setting the tax wanted has not been achieved. So perhaps the way round it, and it goes back to Jason's point of all the historic stuff that's still cluttering up things, is to scrap completely tax legislation and scrap completely having a rule-based system and go to an outcome focus. So the government say, these are the outcomes we want. It is down to you to achieve those outcomes and give up this unequal struggle.
Richard.
I confess I don't understand your comment, Linda. I don't know how the tax system can be a voluntary box donation system, which is what it sounded like you were proposing. So there must be something I've missed there, because that sure as hell isn't going to work. But I took part in a discussion yesterday, 30-odd accounting professors, basically. And we were talking about the undergraduate accounting syllabus in the UK. And there's one very important thing that is virtually missing from it. And almost, I mean, you're either talking about lawyers or accountants becoming tax professionals in the UK. Lawyers might do a bit of ethics, or they'll probably hide it under jurisprudence. But accountants don't have any such equivalent theory, overarching theory like jurisprudence, and they most certainly aren't taught ethics. It's simply not basically in the undergraduate accounting materials that they are taught at university. There's no philosophy, there's no principles, there's basically what are the rules. Everything about the undergraduate education course is technical rather than how do you fit into society. Our role, the 30-odd people who were present, was to discuss how do we actually train undergraduate accountants to think that they might be members of society rather than members of finance teams or accounting teams or whatever it might be, including tax teams. And that is the fundamental point at which we have to start the process of change. If we teach people as undergraduates that they are actually there to simply learn rules and therefore to find the gaps within them, and that is what we do, then we're never going to tell them that actually their job is to actually be a part of society as well, and therefore they've got to uphold the principles that are expected of them as tax professionals. But that's also true. I mean, let's be blunt about it. Of my own institute, the Institute of Chartered Accountants in England and Wales has never thrown somebody out for doing tax avoidance. Even the most egregious scheme has never resulted in an expulsion for that reason. Yeah, don't pay your fare on the London Underground, you could be thrown out. No problem. Be a mercenary trying to overthrow a government. Oh, you can't be thrown out for that. But anyway, tax avoidance, no way. You can't ever be thrown out for tax avoidance. Evasion, yeah, but come on, that's a fine line as well. So we've got to start at the basics. We've got to teach those who are being trained, this is not their role in society.
Thank you, Richard. I just want that you're really previewing for us the final part of our session today, where we'll really be talking a bit about sort of the training, education, things like that. So you've just sort of lined it up for us. Linda and then John.
I think there you're Richard, going back to a point I made before you joined, which is there needs to be an overriding and guiding principle in the regulation of accountants and lawyers. Lawyers have that to a certain extent, but accountants don't. And of course, you're a member of the ICAEW, but not all accountants are, and taxation advisors aren't. And in response to your point about people being thrown out of the ICAEW for tax avoidance schemes, they can only be thrown out for breaching the principles of the ICAEW. I used to work for the Taxation Disciplinary Board, and they regulate ATT and CIOT taxation professionals. And the problem there is sometimes they had been through the ICAEW, CIOT, Taxation Disciplinary Board, and they were thrown out for things on the edges of the scheme. So, for example, they created a scheme that they knew the revenue had already said wouldn't fly, and then they lied to their clients, and it's the lying to their clients that they're thrown out up for. So indirectly they are, because they are using the scheme incorrectly. But to go back to my point, I wasn't suggesting voluntary taxation because I, for one, wouldn't be paying anything. But I was suggesting the move away in disciplinary and regulation general has been from a rule-based system, which we all had, to now what principle-based has now become outcome-focused. Whatever you call it, you just don't try and do the detail. You just say, this is what you've got to achieve. And it might be, this is what you've got to achieve no matter what. And it would be far easier to deal with that because it then puts the onus on the professional to get to the outcome rather than the government or the revenue to set rules that cannot be broken.
Thank you. All right, John, and then we'll go to our next question.
Thank you. Richard mentioned spillover effects, and spillover effects aren't just internal to one nation's tax schemes. They also work internationally. And I think it was Samal who mentioned the race to the bottom. I would like to flag up the role played by lawyers and accounting firms in promoting that race to the bottom. One interesting thing that came out of the Paradise Papers, which I was investigating a few years ago, was that the company at the heart of that leak, a law firm called Appleby, was very proudly boasting about the fact that many of its senior partners had gone on to very senior political positions in many jurisdictions, and to very senior judicial positions in many jurisdictions. Most of them, what we would call secrecy jurisdictions or tax havens. And it's that relationship, this kind of revolving doors between law firms, accounting firms, and the both legislator and judiciary, which I find very uncomfortable indeed. I have been at the receiving end of that. I worked for many years as the senior government advisor, economic advisor to the island of Jersey, and I saw constant political involvement by tax lawyers and tax accountants, shaping the legislation and shaping the interpretation of the legislation when and if it came to court, particularly around the area of trusts, by the way, which haven't so far been raised. And in that respect, I think that we can't be naive about the extent to which the so-called professionals are in fact playing quite an activist role in shaping and interpreting laws in ways which suit their organizations and their clients' interests. And I think that's one of the worst aspects of the grey areas the grey areas that need to be discussed.
Thank you. All right, I next want to sort of again write two more questions about the tax professionals more as the specific focus. From an ethical standpoint, how should we differentiate between those individuals who design and orchestrate, they're the ones behind the tax avoidance schemes, the masterminds, as we might call them, and those who are sort of then following the kind of path of rule interpretation or manipulation that's been sort of laid out by those who are sort of the masterminds in setting that forth. You know, how ethically should we be thinking about that? Jason?
Thanks. I think to me it would depend on how we're defining the masterminding, design and orchestrate the tax avoidance scheme. Obviously, you know, John's raised the issue of tax professionals being involved in the design of the legislation which facilitates the scheme. Or are we talking here about the individuals who haven't necessarily designed the particular legislation they're working with, but have found a loophole to try to exploit? Because I'm not sure there would be much difference between those who first spot a loophole that someone else has developed and those who follow on, or the clients who are paying them. You know, all of them involved in the abuse of the tax system. Whether there's some degree of ethical failure between those who've deliberately set out to try and manipulate the very foundations of the system and those who simply exploit what they find that's been left there by others. That's maybe where there's a degree of difference.
Paul, and then Richard, and then Carlos.
I would say that I think that there is already a kind of a regime, at least in the United States, in place that is fairly effective in that regard. You know, to the extent that folks are just sort of following the rules as best they can, and you know, their deductions or there's some issue on their return that they may face, they'll have to pay interest and some penalties. If you have promoters of schemes, the penalties can be more severe. And then if it's, you know, clearly intentional conduct, you have the possibility of criminal sanctions. And then surrounding all of this, of course, is the civil liability that can flow from the professionals who, you know, lead their clients astray and have them ultimately paying penalties. So I think that there are already, I think, fairly effective regimes in place to deal with the severity or the intentionality of the conduct in the States.
Thank you. Richard.
Yeah, I'm sort of building on what John had to say here about the offshore arrangements, because John and I spent a lot of time looking at offshore for a decade or more, and looking at the spread of abusive structures from jurisdiction to jurisdiction. For example, the sham trust, as I would call it. The BVI, is it the Vista Trust in the BVI, and it's the Star Trust structure in Cayman, and you know, generally it's the trust without with a retention of benefit, where the settlor is able to renounce the entire structure at will, reclaim the assets, and so on. These are not trusts. These are not trusts as we understand them in UK law, certainly. Where there had to be clearly a settlor who disposed the property from which they therefore excluded themselves from an interest. And yet around the world, suddenly from about late 1990s to 2010, a whole host of legislatures, many of them British, let's be honest, secrecy jurisdictions, reproduced these common law structures which weren't compliant with UK common law, but appeared to be trusts nonetheless. Who did that? Is the question I think that is particularly being driven at here. That these weren't promoters even, they were supra-promoters. They were the people who transmitted the idea. And that's a question I've asked in some of the work that I've been doing. I'm linked also to Copenhagen Business School, where we've done quite a lot of work, particularly led by Professor Len Seabrook, looking at the role of professionals. And I would suggest looking at his work is worthwhile in this area, where he's looked at both tax professionals and accountants in what he calls global wealth chains. There's a whole book on that subject out. And there were, in particular, 1 or 4 firms who could be identified as being the communication channels for these ideas from one jurisdiction to the next. And you know the names of those firms. You know, I used to work for one a long time ago. KPMG was my first employer in accountancy. And EY and PwC and Deloitte were the other mechanisms through which these things were transmitted. And we saw that. They arrived in Jersey via these firms. And we saw the people in Jersey promoting this legislation. And if you want to see some of the documentation about the promotion of legislation in Jersey, look at the work of Professor Prem Sikka, who looked at how Jersey was used to promote abusive legislation to try to force change in the UK. Now, that was not coincidence. That was the firms themselves seeking to change the overall architecture of the worldwide tax system. So they don't fall within the promoter legislation within the UK. They don't fall in the promoter legislation quite probably within the USA. What they are the agents for subversion of the system itself. And I'm quite happy to call them that. I mean, I think they're anti-democratic organizations. I mean, let's be blunt about it. I do remember the time when I was asked to name the 4 biggest threats to democracy in the world, and I think somebody expected me to name Cuba or North Korea or something on my list. And I actually named those firms because they are trying to undermine the tax revenues of the elected governments of the West. And that to me is an anti-democratic organization. And I always saw, and the work that I've done with Silas Stalsholm, who was at Copenhagen Business School, about the structure of these firms, showed first of all that they themselves use these structures. I mean, for example, KPMG in the Balkans is actually a Guernsey LLP, which is very hidden from view, which is pretty bizarre. But they also structure themselves so you can't find out what the entire structure of that entity is. They're incredibly secretive. PwC in Japan threatened to sue Sila and myself if we disclosed the number of employees at PwC in Japan. In the course of the work we were doing. They're so secretive. And then I pointed out that it was on their LinkedIn site, so it really wasn't a state secret. That kind of undermined their case for suing us. But the point I'm making is that they are so dedicated to secrecy and the transmission of it that they have created structures to deliberately result in that. So when we're talking about promoters, let's forget that. We're talking about the people who actually transmit the whole structure. The LLP is an abusive structure fundamentally. I use it honestly, but it can be used for abuse. Most of these trusts are abusive. Most foundations in the world are not consistent with the principles of charitable and other styles of foundation that we would expect. How do we actually put the regulation under these structures that delivers the change that we require? That's the meta question here.
And it's interesting just listening through the different angles you've each taken to sort of tackle that question. There really are sort of masterminds, more really active, creative, aggressive participants, and those who are then working with a system that's perhaps become complicated for a host of reasons, intentional and otherwise, and then are sort of making their way through the gray area kind of against that backdrop. So that's the system they're now availing themselves of. So interesting for us to be thinking about that. Last question I wanted to ask in this area is coming from a little more internal to these tax professionals. And really to ask sort of what are the main concerns that you've seen of tax professionals as they navigate the gray area? So from their perspective, sort of internally, and where do you see or how do you see normalization play a role among tax practitioners, and sort of what does it look like? Robert.
I think the main problem may be that the large firms have no internal ethic rules. I think it was Richard who mentioned earlier there is no ethics training at universities, which is correct. Certainly not when I went to law school. There's no ethics training at law school, and certainly not if you do a tax LLM. It is treated as a technical discipline. But there's also not much academic research in the area of ethics and taxation and the morality of well, moral rules for, let's say, political philosophy underlying taxation. That is still an area that's pretty new. We need more of that, I think. I'm trying to do it myself to some extent, but we need more of that. And that could translate in more ethics at universities, saying how far can you go if when you are a tax professional, regardless of whether you work internally or as an advisor or for the revenue service, you need some ethics there too. When I worked for the revenue service, we actually did have a sort of a ethical code of what you could do and not do, since of course you represent the government, but you're supposed to uphold the law. So there were some things you could not do as a professional working for the IRS. But basically within the accounting firms, it is personal. Some people refuse to do things, but there is no guide for the professionals from the firms itself. And that's probably because they make too much money with all those structures.
Thank you. Samar.
Yeah, I mean, as you mentioned in my introduction, my podcast is name is Counter Accounts, which actually, the name is after my PhD thesis, which was about, the role of counter accounts that actually challenge the dominant narrative that the tax professionals and institutions and people in power create And how do you challenge? So in my podcast, I think my first 2 episodes, you have to look it up. I can't remember, but the first 2 episodes were where I invited 2 whistleblowers of 2 major banks, one UBS, the other Julius Baer. And both whistleblowers, if you hear my discussion with them in those episodes, it's very clear. Ethics, obviously. There was a time that they decided that is not right. Okay. Major reason why they had to whistleblow. Okay, but they used internal channels first. Both of them used internal channels. They did not get support. Okay, and then the story was leaked to the media and became public, and they became whistleblowers. You know, they're going through their court cases. I think one is over, the other one is still going on. Yes, of course, there is the education that you learn from your teachers at home, but I again come back to the whole idea of society. You know, the people in power. Okay, people that have a responsibility. Our politicians, our professors, our parents. You know, from whom we learn the whole idea of right and wrong, and ethical, what's ethical, what's not ethical, you know. There is no institution where you go, you're gonna be the masters in ethics, right? There's a moral compass in EA, but at the same time, I think it's important that the organizations have a clear and independent whistleblowing system. Okay, where these whistleblowers, both whistleblowers that I interviewed from those major banks, had terrible time. Okay, their careers were ruined, obviously, but economically, when they had to go through their court cases, you know, then the mental health, family, and huge pressure and the stress and strain they had to go through. I think that's another important area. It's not just ethics, but also, you know, there should be more support from the government level. And I'm talking about these both whistleblowers from the EU, within the EU. So imagine if this is happening to whistleblowers in the EU, what's happening in developing countries or countries in the global south. So yeah, these 2 areas I would like to mention.
And actually, as far as I say, that really sort of again also previews part 4, where we're sort of thinking a little bit more about education, professional training, and sort of other internal structures within the places where these decisions are happening. But to the extent, and I think kind of coming back to this question, to the extent we're not necessarily there right now, how is it that we're finding the tax professionals really navigating this space, right? Sort of how are they seeing it? How are they experiencing it? And how do they make it sort of all right in their mind? So Ted, on to you.
Yeah, thank you. So the question is specifically is how do tax professionals think? But I think that question is inherently related to 2 other questions, which again, we're previewing. How are they disciplined when they fail to think the way they're supposed to think? And how are they trained to think? So that's the educational question. I certainly am very familiar with that in the tax lawyer context. Tax lawyers are subject to serious disciplinary consequences if they step too far out of line. Lawyers in general, at least in the United States, are subject to serious disciplinary consequences. Right now, we have a disciplinary hearing going on for John Eastman, who you may recall provided Donald Trump with advice on how to overthrow the 2020 election. And he is going to lose his license to practice law. I've looked at the codes of ethics for accountants. I've looked at codes of ethics for some other professions. None of them are remotely comparable in terms of the severity and their enforceability. And I think to the extent that we want folks to be thinking about these things, we need to have sticks that come down when they don't think about them the right way. And to start that all off, we need to introduce that in the educational system. So in the United States, at least, every law student getting a JD must take a course on legal ethics. And in our tax program, we have a course on tax ethics as well.
If I am next, it all went very quiet, so I'm going to guess I am.
Sorry, I was on mute, trying not to disturb the flow. Yes, you are next. Thank you, Richard.
Sorry, I decided to jump into the silence. I agree with what has just been said. We clearly have a failure inside the accounting profession to deal with this. But do remember that in the UK, the term accountant is not regulated. Anybody can call themselves an accountant and nobody can stop them doing so. They're meant to register with the revenue, who are meant to be their regulator, which in itself is ridiculous. They're a tax authority. They are not a professional regulator. And if I'm honest with you, they're not great when it always comes to ethics either. I've just concluded a 5-year tax case where I got to be honest, their conduct was not great. Very good in the end for my client, but they did not cover themselves with glory in this process, let alone competence. Now, let's move to ethics. I ran a firm. I left KPMG in almost exactly 40 years ago, after I'd been told rather quietly in the tax department how to set up an offshore arrangement that could never be broken by a tax authority. Whispered quietly, no formal training system, taken aside by a senior manager and told, oh, no, it's very simple. You put the company in one jurisdiction, the directors in another one, the checkbook in a third, and the trust that owns the whole structure in a fourth. That's fine, Richard. You'll never have a problem with that. And I thought, this stinks. I went off and set up on my own. I've always been I haven't always been a rulesy, and I'm sure at the age of 5 I didn't know about John Rules. But since I discovered John Rules, I've certainly been a rulesy. And the whole principle that my firm used was, are we putting something forward here that would be applicable if we were putting it forward for everybody else? Is it acceptable to everyone? I know. You can obviously extend that idea, but I used Rules' version of this idea. And that was the principle. If it was not going to be fair to everyone in society, we didn't do it. And it resulted in a very simple ethic, which was, we'll sack clients who don't want to agree with that idea. You can have this firm as your accountant, so long as you play by our ethics. And I can well remember conversations where clients said to me, I don't want to do what you want to do. I said, that's absolutely fine. You're no longer a client of this firm. But I've got to be a client of your firm. You're my accountant. I was your accountant. I am no longer your accountant. We have just terminated the relationship. You don't want to do what is ethical. And the thing is, I never knew another accountant who did that. They didn't say the relationship of trust between you and this firm has failed because we don't share a similar common ethical basis towards the payment of tax. And until that happens, that the firm is actually confident enough to say, we will sack a client simply because we don't like their ethics, that's not going to happen. But we still have accountants telling me time and time again, it is your ethical duty to minimize your tax, your client's tax, whatever the case. I've never mitigated or minimized my own tax liabilities. There have always been things that I could have done every year that I haven't. I could maximize my pension contribution. It makes no sense for me to maximize my pension contribution, for example. But I don't want to do that. So why should I have that duty for a client? I have to use my ethical approach to decide with the client what is in the best interest without ever abusing someone else in society. When we get to that point, we'll have an ethical profession. We are so far from it.
Thank you. Okay, so we have Fabio, Sid, and John.
Yeah, and again, with this claim that I'm not an expert on tax lawyers, but I'm just drawing here from other studies that I've read about other subsets of the legal profession. I think, first of all, normalization is somewhat expected, right? People create stories to justify things that they do that sometimes go against the law, right? And we've seen this in studies of corruption, for example. And I think in the case of tax avoidance, there's a special component of this, which is the intellectual challenge involved, right? These are solutions that are not simple to develop. And I did not watch yet Oppenheimer, but I think if you task somebody with building the first atomic bomb in history, this person is going to be very excited about this task, and they might not realize the dangers that are involved in this task until it's very late. And I think here it would be kind of the same, and with corruption too. And then obviously, the place where you go that you would draw some directions to complicate this process of normalization would be ethics. But here again, this issue that we discussed before about the indeterminacy of norm systems, it also happens in ethics. So, in the case, and I think, and we also discussed here how this indeterminacy or these contradictions in norm systems are purposely introduced. And I think that's very much the case of legal ethics. So if you think about the US, for example, there is an idea that lawyers should be a hired gun, that they should be at the service of the interests of their clients, right? And that's very important, for example, for criminal defense. I mean, think about a public defender who is going to show up in court and defend somebody who committed something very atrocious. Obviously, this person has to, be able to articulate an effective defense, regardless of his her identification with what the client did, right? But when you transport that to a different setting, that might raise all sorts of problems. And in the case of lawyers who practice for powerful corporations trying to avoid taxation, right? The idea of a hired gun is a problem. But you can't give up that idea because it's important for other areas of law practice. So, you're still going to be taught about it in law school, right? And you're going to make use of that to build that story that will matter for you to justify before yourself or even before discipline bodies in the future.
Thank you. Sid?
Yeah, maybe just to add what others have said, and not from the legal perspective, I think what was different before and different now is the risk of detection is too high because tax authorities are now equipped with technologies. Now AI and all those things are coming up, analytics. So that has completely changed the game for tax administrators. Previously, it was not, but because of technology, there is a big risk of detection. So that's one point. If you have to look at in case of multinationals, the tax decision, it's not taken now by the tax directors. It's taken by now the board, the shareholders. If you look at the the annual report of Anglo-American, there is a big 20 pages only on tax, where they have paid tax, how much, what is. So tax is not just from one perspective, it also has a long effect. If the news comes out in the public, this company has done this, it has impact on share market, the stock price goes down. So it's the entire what we have to think about of this is how do we incentivize the better behavior? How do we, when a lawyer is following the correct path of how to avoid over aggressive tax planning. It's really difficult to draw a dividing line between what is aggressive and what is not aggressive. I think law as such, the field, but how do we, the key way to address this would be how do we incentivize the better behavior? So that could be one of my point, and other would be how to nudge the taxpayers, and I think there are three key issues. One is the moral issue, the second is the governance issue, and third, I think, is the financial issue. So we have to think more from the mindset change rather than talking more from the perspective of ethics and moral.
Thank you. John.
Yep. First of all, Fabio, do watch Oppenheimer. It's a great film and it's multidimensional. But one of the most interesting things about the film and the book, which is excellent, is the extent to which the whole physics community was engaging right from the outset in the ethical things, particularly people like Niels Bohr and Oppenheimer. And that's what the film's all about. It's amazing. It's a real deep dive into people talking about ethical issues. And I want to pick up on something that Robert said, which rings a lot of bells with me, which is about the lack of both training and research into professional ethics and how they're applied and how they're theorized and how professional associations do or do not guide their members on ethical behavior, particularly in the area of tax. Now, as it happens, about in 2015, I think it was, I was given this teeny-weeny little research grant to go around the world and talk to senior tax partners in a whole bunch of law firms and accounting firms, and we were talking about the most senior partners there. It was all off the record, totally anonymized, but I was looking at I had been asked to look at the moral economy of tax practitioners, and it was published in the book about the moral economy of fraud, which published in the Routledge series. So there's the advertisement. But during my discussions, which were totally off the record, and I talked with over 30 or so people from a variety of countries and backgrounds, it was quite diverse. Many of them, in fact, I think the vast majority, probably 80%, when I asked them, did they find that they were able to align their personal values with the work they had to do for their professional practices, they all said no. They had to park their ethics at home, and they didn't feel comfortable about that. Now, that's an appalling thing, because in my view, the role of a professional person is precisely to bring their moral values and their ethics to the table. And if they're failing to do that, then they're failing in their professional duties. There's clearly a calamitous failure of professional behavior here. And when I kind of probed more, I don't have my research notes in front of me, and I'm not pretending that this is a proper research exercise. It was just a kind of toe in the water type thing. Many of them said they felt immense peer pressure, either in the boardrooms or from fellows. It's the peer pressure that pushed them into it, and they felt uncomfortable. And there was a kind of herd thing, because all the pressure was maximize fee income, maximize profits, forget about public interest. So I think that's part of the problem. But I sum up by saying a key part of the problem is the total failure on the part of most professional associations to give clear guidelines on ethical behavior in these areas. There's nowhere that they can fall back to and say, this underpins my moral position here.
And I just want, oh, sorry.
Sorry, guys, end there.
I just want to pick up on your observations about the inquiry about the sort of leaving their morals at the door and this sort of disjuncture that creates. That's really going to be an important theme in our discussions on October 11th, the issues of moral distress in aspects of the profession. So it's a really nice preview of that. Okay, Philip, on to you. So Philip, Linda, Robert, Paul, and just to give you all an exciting bit of news, we'll be taking a break right after that. So we'll have our 5-minute break or so after we finish this question. So Philip.
I would like to plug in a remark, very interesting remark that Richard made earlier, that when you decide to advise someone to do something, you need to think if this can be replicated on a large scale. I wonder if having stateless companies in Ireland, such as Apple had, is something that could be replicable. Could all companies in Ireland be considered stateless because they are incorporated in Ireland, but they are managed in the US or at the Caymans for Google? I mean, this is and this leads to another question, which is, yes, tax is very complex, extremely complex, but there are some schemes that are implausible, totally implausible. How can you have a company that is stateless. Even a child understands this, but still this has happened. And when the European Commission tried to challenge this, maybe on very thin ice, on state aids grounds, yes, but well, they had the upper hand. So I mean, it is hard to educate professionals when things that are so implausible, so difficult to replicate still are accepted in general by the legal system.
Thank you. Linda, turn to you.
Thank you. And I apologize, Diane, because I'm part straddling these two parts again. I'll be as quick as I can. First of all, I wanted to challenge the suggestion that lawyers in any jurisdiction are hired guns. Certainly, they're not in the UK, and the heads of American bars that I met, I would say no to that too. That's the public perception, but even in crime, as I said earlier, your first duty is to the court, to be honest. You can't lie to the court for the benefit of your client. You're not a hired gun. But my point was related to the low value that's placed on ethics generally in society. And I don't think it's anything to do with governments. I think it's just not a sexy subject. And my reason for that is when I was a trainee lawyer, my only piece of ethical training was don't act for both sides in a transaction. And what I really learned then was from my principal, and my principal instilled those ethics into me in my training contract and in my first year as a lawyer. And that's where I really learned ethics. So when I was president of the Law Society, I had a nice part of my presidential plan, which was going to be persuade universities to run ethical courses. And I had roundtables, I had meetings, we produced a sample and an explanation. And then unfortunately, I went to universities and I was told, this will not get bums on seats. No one will want to study this. There's enough pressure on the timetable. And what we're looking at instead is setting up innocence projects and advice clinics, because that's what students are really interested in. And that's something they'll select a university for. So can I blame the universities for not being interested? Or can I say, it's the wider society have no interest. We have lip service. We expect ethical standards from other people. But when it comes to putting in the hard work of understanding ethics and applying ethical principles, the populace have not enough interest in it. And it's how do you raise that? Has there ever been a time in society, I think probably not, when ethics really was believed and held firmly to the populace's bosom? I suspect not.
I don't think I want to answer that one, Linda. Robert and then Paul.
Yes, thank you, Diane. I had the same as first the same remark. We are not a hired gun. I'm not seeing my role like that. Yes, the first priority for me is I'm there for my client. Of course, that's my first responsibility. It's not my only one. I think Ted will agree with that. I see myself as a guide in tax land for my clients. I explain what tax laws there are, how they work, what their obligations are. And I put also a border there that I will not cross. I have my own firm too, like Richard, probably for the same reason. Yes, I agree with everything Linda said about ethical training. We expect it from others. Of course, a problem is that the members of parliament or Congress display unethical behavior themselves all the time. So whenever they talk about ethics, it doesn't have much value. But I think the professional organizations have to do it. I think the universities have to start putting more emphasis on it. And so we can, and then hopefully the firms themselves develop that. But slowly you can build it up in that direction. Thanks.
Thank you. Paul.
I'm competing with people's desire to go to break, so I'll try and be brief. I was just going to say, at least in the United States, and there's been some mention of this, but just the degree of training you get as a lawyer actually is, I think, reasonably extensive. You have to take ethics classes in law school. You take an exam on ethics to qualify as a lawyer, and then once you're licensed, you're required to take continuing legal education classes that must involve ethical training as well. So there's a not just rules, but also a constant sort of inculcation of the values that are, incorporated in those rules. And I think that actually is not a bad model for other professions that maybe don't have that same singular emphasis that they do in the law. And I guess I would just, even beyond other professions, be thinking about education more generally, because I think that's been kind of a theme that others have mentioned. I recall a friend of mine telling me years ago that he was sending his kid to Catholic school, not so much because he was religious in any way, but because they taught values. And there's really been an abandonment of that in our lower levels of education, and really thought can be given to, the precise kind of idea. I think it was that Linda was mentioning of, what about requiring ethical training? What about requiring an ethics class? I think kids who are studying philosophy are getting some of that. But right now the kids are learning their values from social media, and there's really no structure to it. It's kind of like the cause of the day. I think it does work to have rules and then to require education on them on a sort of consistent level.
Thank you, Paul. And actually, I want to take your comment and wrap it back to the beginning where we started, because I think it's really useful to point out there is fairly extensive in the U.S. set of requirements on professional ethics, both education level and then as an ongoing lawyer. And I regularly teach these ethics panels that attendees at tax conferences are required to show up. I always hope it's doing something. But I think for me, as I'm listening to our conversations and think back to where we started with the first set of questions, there's ethical training, ethical requirements, ethical exams, ethical continuing education requirements. But our conversation at the very beginning showed the challenge that we collectively as a profession, tax professionals, have in trying to articulate exactly what the duty is in the gray area, and that duty against other pressure points. And so I think that the better we can do in that, the more then that we can weave it into the ethical conversations, both at the law education level and then later in the professional sphere. So I am going to call a 5-minute break for us now, just to let you know, right, we're going to pick up, we're going to actually start with part 2. Because I think we've had a lot of conversation already that's been great and actually previews much of what we'll be picking up later. So we've done some of our later work already. So our next session will be all of session 2. Then we'll take a short break, and 3 and 4 are much shorter, and we'll combine them together. So that's our plan, and we'll be back in 5 minutes. Thank you all.